The market has become increasingly anxious. Investors fear a looming global recession. Central banks are raising interest rates and global economic growth is looking very bleak. Traders are buying safe haven currencies rather than those with the higher rates. Therefore, the US dollar has benefited the most. We will discuss how economic releases may affect trading in the global market next week. You are watching the InstaForex TV channel. Investor sentiment is worsened by the macroeconomic data from Europe. On Monday, news about the economic situation in Germany, the driver of the European economy, will show a gloomy picture. The IFO index is expected to hit a 4-month low. Raging inflation and the high interest rates are unfavorable for the business environment in the country, weakening the euro. And there are few developed countries that have favorable economic development conditions. These include Japan and Canada. Unlike Japan, where the interest rate remains unchanged, with a minus sign to support the local economy, Canada's central bank is still trying to follow its US counterpart and raise rates. The Bank of Canada has refrained from rate hikes for several months. In April, inflation continued to increase. During its last meeting, the Bank of Canada decided to raise the rate. Economists suggest that such a move may bring inflation back to 3.4%, still below the target level. Canada's central bank is likely to maintain its hawkish stance. Therefore, the Canadian dollar may strengthen against the US dollar. High interest rates are only good for speculation in the currency market, as the currencies rise in anticipation of a tightening. However, economies are suffering, and macroeconomic data confirms this. On Tuesday, US durable goods orders will be released, and the indicator is projected to post a decline of 1%. However, April's data should have shown a decline too if it were not for the sharp increase in the military aircraft orders by a staggering 32.7% that offset the decline in the other segments. Nevertheless, it remains to wait for May's figure. Let's get back to central banks' interest rates. The Reserve Bank of Australia paused rate hikes, as did the Bank of Canada. Monetary policy tightening has not borne fruit. Inflation has not started to slow down. On the contrary, it has increased to 6.8% from 6.3%. However, economists believe that a decrease to 6.1% is still possible in May, and that the regulator should cool down inflation using other instruments. Apparently, higher rates do not lead to a slowdown in the price growth, but it certainly guarantees a deterioration in a business sentiment and a reduction in the consumption. All reports indicate that people would rather not spend their savings. For example, the German research group GfK reports that the Consumer Climate Index remains at the spring 2020 level when the pandemic started. How we're going to be in the short term in financial markets, we will definitely tell you in our news releases. Subscribe to the channel and follow news with us. See you soon.